AMC stock at the time of recording this video is up 3.88%. What is going on? What do you need to know? What is the data looking like today? We're going to get into all of that here in this video, as well as what's happening in the broader markets today. What do you need to know as an investor? Let's go ahead and get started. Hit that like button and subscribe to the channel if you guys have not done so already. Now, first things first, if you take a look at GME is up 14% today. So you are seeing this relationship, sympathy, if you will, with AMC and GME. Obviously, GME is seeing the larger rally and AMC is seeing the sympathy rally. There's no specific reason why GME is even moving higher. This article says retail traders reignite rally in GameStop shares. GameStop shares jumped nearly 20% to a two-month high on Wednesday, looking to extend a rally ahead of quarterly results next week and as risk appetite returns among retail traders. The video game retailer shares were trading at $16.28 and were among the most actively traded on the New York Stock Exchange. The stock closed about 13% higher on Tuesday. Individual investors purchased 1.92 million worth of GameStop shares at a net basis on Tuesday, their highest since August 6th. Data from Vanda Research showed. The optimism in the market is attracting retail and traders, indicating the market rally is overstretched, said IPEC. I'm not even going to try to say that. Senior analyst at Swissquote Bank. AMC Entertainment, another favorite among retail traders, rose nearly 7.2% to $7.18 on Wednesday. Says the recovery in meme stocks comes after the S&P 500 closes on its highest level for 2023 on hopes U.S. interest rates have peaked, breathing some life into speculative trading that has struggled this year. Both GameStop and AMC were among the most discussed by traders on social media site StockTwits.com on Wednesday. The sudden interest in GameStop comes ahead of its third quarter results on December 6th. Analysts expect its net loss to narrow to $25.6 million from $29.4 million a year earlier. Quote, some short sellers may be concerned both by this price move, but also that GameStop will release better than expected earnings next week, said Peter Hilberg, co-founder of Ortex. Yeah, we're going to look at GameStop's data as well. About 21.6% of GameStop's publicly available shares are shorted, according to data and analytics firm Ortex. Shares of GameStop are down 27% in 2023, up to Tuesday's close, while those AMC shares have shed 80% of their value. So yeah, it's been rough. It's been rough if you're in GME or AMC, to say the very least. Now, GME does tend to do this quite a bit, where it'll do well before. A lot of the time after earnings, GME usually has some pretty good earnings numbers to give us. So wouldn't surprise me if that does happen again. So just keep that in mind. Now let's look at some of the short data. You have 21.62% short interest of free float, $778.75, that's a lot of sevens, $1 million worth of short positions. Days cover, 16.26 days. That's a lot of days to cover. Short interest, 57.73 million shares that are currently sold short. Shares on loan, 73.83 million. Cost to borrow, 1.68%. Utilization, 88.43%. And a short score of 85 out of 100. Cost to borrow average, 2.55%. Cost to borrow minimum, 0.51%. Cost to borrow max, 9.87%. So data that actually looks pretty good across the board for GME. As far as the data that we were waiting for today, that was your second revision for Q3 GDP. Now, it actually went higher, and I was not expecting this, but it did go higher. U.S. GDP grew at a 5.2% rate in the third quarter, even stronger than first indicated. A lot of this does have to do with inventories. It says primarily the upward revision came from increases in non-residential fixed investment, which includes structures, equipment, and intellectual property. The category showed a rise of 1.3%, which still marked a sharp downshift from previous quarters. Government spending also helped boost the Q3 estimate, rising 5.5% for the July through September period. However, Consumer spending saw a downward revision, rising just 3.6% compared with the 4% in the initial estimate. So this could actually be seen as a little bit of good news because about 70% of GDP is consumer spending. And yeah, sure, GDP was offset and moved higher by some other things like government spending, what we just talked about. But the consumer themselves actually not doing as great as maybe we thought previously, and that could explain why the markets are in the green today. Now it says there was some mixed news on the inflation front. The personal consumption expenditures price index, a gauge the Federal Reserve follows closely, increased 2.8% for the period, a 0.1 percentage point downward revision. However, the chain weighted price index increased 3.6%, a 0.1 percentage point upward move. Corporate profits accelerated 4.3% during the period, up sharply from 0.8% gain in the second quarter. So overall, pretty good data that we got. Nothing that is like super bearish, nor I would say super bullish at the same time. That's why stocks are kind of mixed, right? Besides your Russell 2000, the Russell 2000 is up 1.3%. 1.3%. The NASDAQ is up 0.14%. The S&P is up 15 basis points, and the Dow is up about 0.10%. But that Russell 2000 massively outperforming. I've said it so many times here on the channel. Interest rate sensitive companies. Those are the ones you want to be invested in. Those are the companies that I think will massively outperform the markets in 2024. Those are companies that have some debt. Those are companies that could benefit from refinancing. Those are companies that I personally want to own that are well-known names that maybe have been improving their earnings over the past 2 years. This whole slump in your Russell stocks the last 2 years or so, well, it's not really fundamental based. A lot of companies have actually been seeing better numbers. Now, some have not been. Some have been hurt a lot. But a lot of the companies that I invest in, the numbers have been getting better and better. SoFi, Fubo, PayPal, right? DraftKings, all these different names, they've actually been doing better and better over the last 2 years. Stock prices have not. So I think you do have some catching up to do. We'll ultimately wait and see. Now, Fed Barkin says rate hikes are still on the table if inflation doesn't continue to ease. Yeah, they're going to push us into recession. That's kind of what that's sounding like. If you continue to keep rates this high, even if inflation takes a while, it's going to catch up to the economy. And I think you're already starting to see that in some of the personal spending data. Now, Jamie Dimon says JP Morgan Chase would exit China if ordered to. JP Morgan Chase CEO Jamie Dimon said Wednesday that his bank, if ordered by the U.S. government, would exit China, the world's second largest economy. Quote, if the American government makes me leave China, I'm leaving China, Dimon said at the Deal Book Summit during a discussion about a potential future conflict over Taiwan. Growing geopolitical tensions fueled by wars in Ukraine and Israel have raised concerns that China could move to annex Taiwan. A lot of that is political, but that would this obviously is not good for tensions. Maybe let's go ahead and see. I haven't even looked yet, but let's see. Is gold up today? Nah, gold's actually flat today. That's surprising considering Jamie Dimon's comments and the fact that you've seen gold just really outperforming recently. I've been trying to figure this out. Why is gold outperforming? Why is gold up 13%? Even as you've gotten, temporary truce in the Middle East, you actually seen gold go higher on that news, right? Gold hasn't really come down ever since that conflict started on October 7th, right? It's just been basically vertical for gold besides this period right here. Makes me wonder if there's something else going on under the surface. If people somewhere want a little bit more protection or to be hedged out in their portfolios. I don't know. It's starting to get pretty aggressive, though, on gold. The dollar is up about 0.14%. Not a huge deal, but you don't want to see that. USO is up about 1%. Again, not a big deal. We've come down a lot recently. So that 1% increase is not a huge deal. TLT is up about 1% yet again today at $92.21. Just recently, we were at the lows of $82. This is good for the banking crisis, right? This is good for stocks. The higher TLT goes, the more of those losses that banks on their balance sheets can start to get back, right? Those unrealized losses are getting smaller as TLT does rise, and obviously that's bringing down yields, which is positive for stocks, positive for a stock like AMC. Now let's take a look at the bond yields. 10-year treasury yields falling another 5.5 basis points today, down to 4.28%. Just continues, and that's exactly what we obviously want to see. But at some point it will turn into, hey, are we like heading into a recession here? Why are yields coming down this much? Now, if we look at the Fed rate monitor tool to look at Fed pricing and what the markets are pricing in for December and January, there's really only a chance of a continued pause. For March, wow, look at that. There's a 45% chance of a rate cut, 51.6% chance of a continued pause. So March is getting pretty close to pricing in a rate cut. May, you're pricing in the first rate cut. There's a 27.6% chance of 2 rate cuts by May. There's actually a greater chance of 2 rate cuts by May than we just stay paused until May. So yeah, there's definitely some optimism priced in here for Fed policy. 42.6% chance we have 2 rate cuts by June. And if we look out all the way to December, what is priced in right now is a Fed funds rate in between 4 and 4.25%. That would be 1, 2, 3, 4, 5 rate cuts by December. Okay, yeah, that's kind of a lot now. Holy moly. So yeah, we're pricing in 5 rate cuts. I think this rally in stocks is more than justified, because you're not pricing in the rate cuts because the economy is weak. Imagine if the economy was weak. We'd be pricing in a rate cut in December or in January. We're not. Those 5 rate cuts are being priced in because inflation is falling so much. So when people ask, is this rally justified? Are stocks going to fall? The answer is a resounding yes. Now, taking a look at the option activity here today, you have seen 3 orders in AMC stock worth $102,000 with a positive order value of 100%. If you take a look at volume on the call side, volume of 87.82% and volume on the put side of 12.18%. So like all of the option activity today is positive in AMC stock, which is very good to see. Taking a look here at the Ortex data, you have 10.76% short interest off free float, $142.63 million worth of short positions, days to cover 0.9, 21.29 million shares that are currently sold short, shares on a loan 15.84 million, cost to borrow 1.25%, utilization 37.15%, and a short score of 58.36 out of 100. So some numbers that are not exactly crazy high, but they're definitely a lot higher than where they were before. And a quick look at the Stonko tracker data expiring this Friday. Lots of option activity starting to head onto the option chain. You got about 3,000 calls currently in the money, 86,000 calls out the money. In the money puts at about 14,000, out the money puts at 32,000. So if you do start to get more optimism around AMC, around GME's earnings next week, if AMC continues to rise, you could see a pretty explosive end of the week move for AMC, especially if you start to get above $7 per share, $7.50, and then $8 per share. That's where you could see quite a bounce to the upside. I'm not going to hold my breath. I'm not going to sit around and necessarily wait for that. AMC stock is at $6.92, but it does look better than not today. So that's great. Hit that like button and subscribe to the channel. Let me know what you guys think about this down below in the comment section. If you guys want to come trade with us live in real time, link down below in the description of this video. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.